Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Thank you for joining. And for those who don't know me yet, I'm EdCadet. And I will be doing the live session for the Asian session for you. And we are currently doing a 25K Blue Gordon challenge. It's a 2-phase challenge where you have to do 8% for the first phase and 4% for the second phase. And in total, that's 12%. We are currently down on our account with 0.75. Let me go ahead and show you the dashboard here. So we had, actually, we are currently in a trade that we just entered on USD JPY as it opened before even the session start, normally at 8. As we can see here, our stop loss is below that low, and our take profit is at this recent high that was formed in New York PM session. And we are targeting a risk reward ratio of 1 to 3. And we are in a long trade. So far, we are in drawdown. So that's why you're seeing that the account is at minus 0.85%. So we are in closed losses. We are in minus 0.75%. We already took 6 trades, and we had 1 win and 5 losses. So in terms of bias for USD JPY, why I take a long trade, first thing is on the, for example, daily time frame, you can see that we had a push down there. There was a fair value gap in here, and inside this fair value gap, we had a push, and we come back up. That was on Monday. Monday candle dip a little bit, just a little bit below Friday to take some liquidity, and then push back up. Yesterday we had a big run higher without any stop, because I was trying to catch a trade yesterday, but there was no retracement, just up in Asian session last night. So today we're expecting price to be bullish again, and our first target would be today's highs that was formed in New York. So I'm not sure I can pronounce the name. It says that if you're using 1 minute daily isn't necessary. Well, normally for some people, daily, if they are using the 1 minute, they're just scalping the 1 minute. The intraday scalping, and usually I do use the daily so that I can have a higher time frame. How can I say that? Narrative behind my trades. That means if I'm taking a buy on a 1 minute, it might be counter trend, but I need to know what the trend is. Because when I'm entering a trade, like for example on gold, I took 2 losses, and it was both trades that was counter trend trades. And I knew they were counter trends. So that means I took the losses and I was fine with that. And I'm more confident in trades when I know that they are going in the same direction as the higher time frame direction. Like for example, right now, um, as I'm seeing this price action unfold, I'm okay because I know that on a higher time frame, this level right here is yesterday's high, and as we have just pushed from a fair value gap on the daily, that means we should be able to see a really strong move higher. And also on the daily time frame, USD JPY has been bullish since last year, if I can say that. So as you can see here, since last year, USD JPY has been moving up. We had a big retracement that finishes in January this year, but since then we have started moving back up again. And right now, I believe that we will continue moving up until we can reach that high that was formed on October 22nd. So that's definitely, I mean, the R time frame picture. And with that in mind, I usually have a better confidence in my trade. And being confident in a trade is really important because sometimes you might see the trade. I mean, that happens to me when I was studying the challenge. I have seen a trade, I have marked up the trade on my chart, on my trading view, but I didn't actually take it in the challenge. And that was frustrating because at the end, it did end up hit my TP, and it was a pretty high risk to reward ratio trade. It was like 1 to 9, but unfortunately I missed it because at the time I haven't done yet any higher time frame analysis, so I wasn't confident in a trade to take it. So now I am confident, and I believe that it should go higher. And I'm sorry, but I cannot read the name. And Glenn Blaine said, "Go get him." Thank you. Greetings from Samuel Onyeka, and good morning from Gobi Shanmuga. I'm not sure I'm pronouncing those right. Sorry for that. And also, can you tell us your opinion on a 15-minute time frame? Definitely, we can go over the 15-minute time frame. So, Gubby says it's the first time to hear you. Yes, I mean that's the first time I'm live on the Asian session. I already did two New York session, one this morning and one last week. We had this morning we had unfortunately an emergency and we had to leave the chart early. Sina. Okay, great. Thanks, Sina. Good morning, Caesar. I guess I'm pronouncing it right. Great, great. And you can let us know in the chat where you're listening from. Currently, I'm in the Dominican Republic in the Caribbean. So, as I was saying this morning, we had an emergency, and unfortunately, we had to leave the chart. But we did do a pretty much big picture our time frame analysis on gold for those who were listening or who watches the video afterwards. So definitely check that out. It was a very detailed analysis on gold, and hopefully we can do that too on USD JPY. Hopefully, seems that trades looking like it's gonna take our stop loss. But we are just looking to see. So on a 15 minutes, Sina asked if we could give our opinion on a 15 minutes. So currently we are seeing a retracement into the previous day range on the 15 minute. As you can see here, that was our big push up from yesterday. So if we are measuring our range, we normally would see that it's around the 25% between the top of the range and 25%. So we had here 25% retracement, which I believe it should respect, as normally after a big run up day like that, it doesn't retrace that much. Sometimes it does because but most of the time it doesn't retrace between the 25 and the 50% of the range of the previous day. But most of the time with those big range day where there's most likely not so much retracement, as you can see here from 19, it was 19 to midnight, only move up, no retracement at all. We only had a little bit of retracement in London, and in New York, again, we started moving up. So almost no retracement. It didn't even go below 0.75% on a retracement. So the day was pretty much bullish. So right now, for the new day, we seen a little retracement on the 25% level here, which I believe should hold. That's one of the confirmation, or I can say one of the thing that gives me even more confidence to take the trade. As I said, most of the time on variable after the very bullish day, the next day doesn't retrace below the 25% level on the Fibonacci retracement here. So those are usually my levels. And in terms of first and second TP for Gobi Shanmunga, so usually my trades targets a 1 to 3 risk to reward ratio. But if you are one that doesn't really want to sit for a trade to take off, the most or the best logical levels to target here would be this recent high that was formed at 1902, around 1902, 1901, and that would give you a 1 to 1.3 risk reward ratio. That would be my first TP. If I was to say that I want a fast trade, nothing too crazy, 1 to 1 to 3, that's a good risk reward ratio. So I would target this high here. But as I have a bias that is long and I expect price to keep pushing higher, I would target a 1 to 3 risk reward ratio above yesterday's high. So we're gonna see how it's going. And as a two rules, as I have started already with the challenge, we are only risking 0.25% per trade. And if we lose two trades in a row, we downsize the risk to 0.1% so that we can make the 0.20, at least 0.25%. As soon as we reach a buffer of 2% on the account, we're going for increased risk of 0.5%. Once we reach 4% on the account, we'll then risk 1% per trade. So as you can be seeing, we're not rushing it. We're taking our time. It's a no time limit challenge. That means you can take 1 month, 2 months, 3 months. You have no time limit. You have all the time to take this challenge, trade it. So normally, if I were to risk only 0.25% per trade on the challenge, I would have to lose 30 consecutive trades to blow the account totally. So which is so for not the case, we have had 6 trade, I believe, yes, and we have lost 5 of them and win one of them, which is not good, but it's okay. I'm usually used to winning more trades in a row, so it's no big deal as we're not doing high risk on this challenge. Usually I take the challenge for faster return. Like for example, I usually risk, if I'm doing another challenge, I usually risk between 1% to 2% on the first trade. If it's a win, I increase the risk. If it's a loss, I decrease the risk. But on this one, we're going slow as there's no time limit on that. So we're just gonna, and this must have hit our stop loss. Not yet, almost, but it's pretty much about to hit. And yes, it definitely hit our stop loss, but that's part of the game as well, unfortunately. That's one of the things that I usually don't like with Asian. Sometimes you get a push right before 8 p.m. and definitely like around 7:45, and sometimes you have a deep retracement that's going to take out the low of the previous session. As we can see here, this, when the market opens, it formed this low. It usually take out this low and then push back up again. So we're gonna see if we have a second entry, and this time we're gonna be downsizing our risk to 0.1%, as we were risking 0.25%, and this loss we had minus $71.35, including commissions. So we're gonna downsize the risk and see if we can get a second entry here. As we are still positive about the target, but we may be wrong. That's also part of the game. And one thing as well, we might not have an entry because those days the USD JPY has been doing crazy, crazy stuff, running up crazy. So far, price is showing more willingness to go down. So we can expect a deeper retracement then. So we're going to see if we have higher time frame confluences to get a better read on where it's going to reverse and see if we can catch the move up. So right now we are dumping into this down close candle. So we're going to see if it holds and give us an entry. This was formed exactly at 7 New York Open this morning, which makes it very high probability to hold price, but we'll see. Usually, I don't take 2 trades per session. My rules are I only take 1 trade per session. But as this morning, we didn't have the opportunity to take a trade on gold that we missed, so I had to leave, unfortunately. So we're gonna take 2 trades here for the day. Normally, we take 2 trades per day on USD JPY, and we'll see how it goes. So far, things is very slow, so we're gonna see. Ari said JPY has been taking my money in the last 2 days. Lol. Yeah, sometimes it happens, and that's really when you know that you can trade. Is when you don't freak out when those losses happen, and you just stick to your trading plan. And fortunately, you will come back if you stick to the rules. Don't risk too much. Don't over risking on the account. Keep the risk under control. Sina is asking to draw lower high on 1 minute for us. I'm not sure what you mean by lower high. But we do have lower lows here that's being taken out, like this one here. We do have this one here that was taken out as well. And if prices keeps going down, it might take out this one as well. Oh, sorry. Seems that I was double muted. Sorry. So as I was saying, those levels here up here are definitely the levels that I'm waiting to see being broken to confirm a market structure shift, so that we can try to find a confirmation to go long again. But keep in mind that I can be wrong about the direction overall. I can be wrong. Market can be definitely going down. That's a possibility as well. As I don't know if you follow US 30, you can just go on any daily US 30 chart right now and see the last three candles. See what the market has done. That's crazy. Like up, down, and all three candles cover each other's whole range with no. Let me see if I can pull that chart up and show you. That's just crazy. So sometimes price is just consolidating and in big ranges. As you can see here, this down close candle was Friday. This candle was Monday, and this candle was Tuesday. And as you can see, there was like, if you were expecting price to go up, to continue going up, you just definitely wrong about the direction. It's just down, and then up again. So sometimes it happens. That's just price. So if we can see those levels broken, we can have confirmation for our targets up here.
We could change the world, change times, rearrange them. Staying on pace, running the race. Life is a chase, I don't want a place, I want to be first. Work till it hurts, dehydrated thirst till I'm in a hearse. High ambitions in the right mind can take you so far. It's like you lived a few lifetimes. Take off, I'ma break off from the weak minds. They can stay soft, you can change lives, you create thoughts, never waste time. You got one shot, you got one life, better pop off. What do you like? Make a dream job. No 9-5, no mean boss, just my life and free thoughts. You could try to play, but you're never gonna beat me. Look the other way, what I'm doing ain't easy. Bloody and stained from the people who deceive me.
And most part of trading is sitting on your hands waiting. You are not always executing.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me. And what was left over I put towards my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand. And damn, I feel like no one takes accountability. They want the credibility, convincingly unwilling to put in the
And as I was saying, currently we are down 1% of the account. As you can see, the only wins that we had was there. We were risking 0.1% and we made 0.3%. And since then, we are just losing. Seems to be seeing some willingness to go higher. So price definitely gave us an entry there, but kind of missed it.
I'm just telling you to fight for your dreams, but it's not what it seems. Man, it's hard to be seen when everybody wants to be king. Yeah, they all want a ring. Yeah, we all want to be free. So show me what you got, what you bring, how you fight in the ring, how you take a fucking swing. Do you got heart? Are you mean? Got some scars, got some needs. Are you willing to go bleed? I swear to God, they all let me down. I always fought just to wear the crown. I'm off at these fucking clowns who were all taught they deserve an ounce. It's only worth it if you work for it. It's only worth it if you work for it. I won't stop till they hear me now. I won't stop till I wear the crown.
So I just entered that market order at the close of this candle, and as price dip inside of this fair value gap here, we are having our stop loss below the third candle that formed the gap. And as you can see, I took the trade even before our breakup structure, is because of the confirmation that I already had. Those breakup structure are just extra confirmation for me that price wanting to go higher. But as we can see here on the 1 minute, those are 5-minute breakup structure. But on the 1 minute, we already had this breakup structure here that happened exactly at the same level of the fair value gap, and it gives us a fair value gap here, not before that, but exactly here around the same level of the breakout structure, and it dipped down below the fair value gap here again. So price should start moving higher now, as we have done already our strip of liquidity below here. So this trade should give us an even higher risk reward ratio, 3.4. Idea for gold. So I will be doing a review on gold after this trade. Hopefully we have a fast run here to this level, and we'll move to gold a little bit later. But I wouldn't recommend anyone to be trading with somebody else trade. Like, it's like taking signals. That's one thing that I did when I started trading earlier on, and I can definitely tell you that it's the worst advice that you can give someone, because you don't know the system of the person. The system of the person might be like him losing 5 trades in a row, and if you're not comfortable with that, you're gonna like lose your trust, belief in its system, and you're just gonna say, you know what, I'm not gonna do it anymore. And after 9 loss, the 10th trade is a win, and it covers all the 9th loss that he had. The person knew that because that is system, but that's not yours. So definitely not copying anybody. It's just for education purposes, entertainment, definitely. Because one thing is, like, when you're starting out, being able to take a loss and then jump right into another trade, that's definitely hard. I can tell, because there was a time I would have been done. I mean, I wouldn't even bother re-enter that trade. But with time, you get used to it. With time, you get used to losing other part of it. Because as human, everything that we're doing, we are expecting positive results. And the positive result that we're expecting it at a, how can I say that? Repetitively, like back to back, positive, positive, positive. As soon as we have a negative, and we have been taught that in school, as soon as we have a negative, we fail. It's like in school, when you have good notes, that's great. You're happy. Your parents are happy. But as soon as you have some bad grades, or not even bad, but lower grades than the previous semester, that's bad. That's definitely bad, and you have failed. And that's the thing about trading. Failure is not about 1, 2, 3, or even 10 trades. Failure is about a set of trade. Failure is about not respecting your strategy, not respecting your risk management. Failure is about not knowing when to stop and not overtrade. Like, for example, if I had taken a trade on gold this morning, I might have seen this setup even clearer than right now, and I wouldn't have taken it because I have already taken a loss. I would have already taken a loss on gold this morning, and I just take a loss on USDJPY. That's two trade for the day, and that's my rule. I wouldn't go besides that. So as I didn't take any trade on gold, and I had one trade left for the day, so I decided to take another one on USDJPY. And second loss for the day. And this time we had 0.1% on this loss. So which means instead of having 0.50% down, we are at 0.35% down. And whole on the whole account, we are down 1.14%. And as you can see, that's 7 trades. That's 7 trades. After 7 trades, we only lost 1.14% on the account. We better start winning trades. But definitely that's what trading is about. It's not about winning all your trades, and it's 8 trades. In fact, that's the last one. So we're down 1.19%. 8 trades, 1 win, and definitely 7 losses. One thing about me is I don't usually laugh those thing on my chart because kind of remind me of the losses that I just took, and usually psychologically it removes my ability to take another trade after a loss. So I definitely don't leave them on because it affects me psychologically. Yes, Glenn is saying EU is now tapping into a 30-minute fair value gap. Maybe if when it shifts from there, buys on JBP, USD JPY might be better. Well, maybe, but definitely I am still on my bass. But we'll see. It didn't take out this low here. So as of now, our trading session ends because we only take 2 trades per day. So we're just watching price, and we'll go see what gold did this morning. But I want to see how this price unfold on USD JPY first. And as you can see here, this here, that's equal highs. And when price does those things, like for example, it go below this low that was formed at the session open to take liquidity, it went up to create an equal high. You see how clean those are, and it goes down here and didn't take out this low. Those usually are confirmation for going long. Like price is showing, sometimes there's not enough liquidity in the market for a big move up, but price is definitely showing its willingness to go higher. So let's wait and see how this unfolds, and always be certain that you can be wrong, definitely. And that's okay, because with my win rates being low, that's not a problem, because I usually have a 1 to 3 risk reward ratio. So let's say I risk 0.1%, I will make back the losses that I took today. And let's say after that I risk 0.25% and I win, I will be 0.75% up plus 0.1% risk, and that's one in 2 trades. If I win my next 2 trades, I will be 1% up. So just to tell you, that's why I don't recommend someone trading someone else's system. You have to have your own system. Know when you're entering your trade, why you're entering them, what's your confluences, what's your confirmations, and stuff like that. Well, so far price seems to be doing otherwise. So you see the daily candle, how we're looking. So based off of the range of yesterday, we are currently inside the 25 to 50% retracements. On the 1 hour, on the 1 hour, we have this down close candle here, where it's the consistent encroachment of this body of the down close candle here is still, it's being broken right now. If it closed below, we might see further movement down. Definitely, if it closed below, we might see further movement down. But at this point, if it doesn't close below half of this candle body, I'm still sure we're gonna go up to take out this high, but let's wait and see.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up
And
just
we
so they
dip
could see me.
a little bit below this low here, just a little bit.
Towards my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand, and damn, I feel like no one takes accountability. They want the credit.
Well, in the meantime, let's see what gold
Hours it takes to get some power. Don't be f***ing
holds for us. Let's see what gold did this morning.
work until you're prouder and f*** all the doubt.
So for this morning, I had an intensive, I would say, analysis on gold. If you really want to understand what's going on that chart, you might want to watch the live of this morning. So for today, on the 15 minutes, we had almost, as you can see, it was already marked up this morning. If you went to see the previous live, we had this big fair value gap there on the 15 minutes, and inside of it, we had a 5 minutes, I believe, fair value gap as well. No, it was an inversion fair value gap in the 5 minutes right here. And as you can see, around 10:40, price went exactly up there and just reversed. And then we had two levels as objective: the consistent encroachment of that wick and the low of that wick. Both were reached for the day, and there was a 1 minute, if I believe, or a 15 minute. Let me see. It was in the 15 minutes. Yes. The second fair value gap down there was a 15-minute fair value gap that we marked out because it was around 7:30 and price has already breached our first target and our second target. So my thought was, if price has already reached into our two targets for the day, it might not be willing to go up there. So I was leaving room for the idea where price would go into this fair value gap and drop again. So as you can see here, that was our first trade idea. You enter here on this fair value gap. Oops. And your stop would be at the top of this previous value gap. Why it's not above the third candle of the fair value gap? Just because I just mentioned, if price has already taken both of our targets, I didn't expect it to go higher. So if I don't expect it to go higher, I don't want to put my stop loss higher. That's my risk for the trade. And it would have given us a beautiful 1, 2, 3 something, even 1 to 4 trades. And if you wanted to re-enter at 10:40 when you get this beautiful entry here at 10:30 and 10:45, it just dropped back. So that's to trade on gold, but unfortunately we're not in front of the charts. We had an emergency, so let's see what. Oh, JPY seems to be dropping. So at this point, we are half on the bias. I mean, long term we're still going up, but on the bias for today we are 50-50. we might be seeing a deeper retracement, but we might also be seeing a reversal, like in terms of the daily range. We might be seeing a candle that would cover entirely yesterday's range, or we might be seeing a deeper retracement. As I've showed you already on the US 30 how it did, it's just like price is consolidating a lot after the NFP. It is not usually the same, but as you may know, we are in August, and August is a month that is really, really weird in terms of trading. You can see all the weird stuff in this month.
Next time you sing along, trust me, there's nothing wrong. I just need to carry on, cause society's a myth.
In some more experienced trader might tell you that this is the month where their win rate decrease the most. I mean, I'm not experienced to give any data. I'm not that experienced to give any data about my win rate or my performance, because I believe that to tell that you have 60%, 50%, or even 80%, sometimes some people said, to have 80% win rate, you must at least have 10 years of experience in the market, 10 years of data that tells you that you have 80% across 10 different years, 10 different market behavior, 10 different psychological master from your part. Because one thing some people don't understand, the level of success of a strategy is different from the level of success of the one applying the strategy. The strategy might have a 90% win rate, but the fact that you are human and executing that strategy, the win rate might decrease to even 50, 40%, because you are executing the strategy. You're not a machine. You're not like this is this and this and that. Like if it was an EA, for example, that was executing the trades, like if it lost 10 trades, it doesn't know it lost 10 trades. It's just executing the code that you gave him. But you definitely know, you definitely would panic. I mean, not everybody at the same level, but still, even experienced traders, they do experience that sometimes. And some of them, usually, for example, some people, they just took the month off, like December, January, and August. Those are 3 months that most of experienced traders, they took those off: January, December, and August. Because in December there's a lot of crazy things happening. It's the end of the year. In January, not so much volatility in the market, not so much, how can I say that, willingness to do the move. Like it's just the start of the move. For swing traders, you might be more aware of that. Like for example, at the beginning of the year, you might have a little consolidation, or you might have a big move, like unexpected move happening at the beginning of the year. At the end of the year, it's close of the season, so definitely in August, it's definitely another month to be careful about. So as I said, I usually don't have that many losses back to back on USD JPY or even gold, but so far we are at 1 win, where we definitely had our 1-to-3 risk reward ratio, and that's what we're counting on, so that we don't lose confidence while taking this challenge. But usually in my aggressive mode, for example, if I'm aggressive on a challenge, I would have lost my first trade. I've lost 5 trades in a row, I believe. Yes, 5 trades. So first trade, I would have taken it to, let's say, 2%. I would have been down 2% on the first trade, and then I would have downsized my risk to 0.5%. No, not 0.5, but 1% on the second trade. So that would be 3% down, and then I would decrease my risk to 0.5% on the third trade. That would be 3.5% down. I would have decreased it again on the fourth trade. That would have been 3.75%. And I would have taken on the fifth trade 0.10%. Yes, that's it. And then I would have been up 0.25%, 0.30%. So 3 around 40% down, and today I would have taken a loss. So I would have been in a drawdown of 4% right now if I was aggressive. And that's the thing about being aggressive. Like if it's because sometimes it happens that I win, like I take 10 trades and I win all the 10 trades. I don't lose any one of them. And those times when they happen, you should not be happy. Same way when you lose 10 trades in a row, you should not be sad, because it's just what it is. Like winning 10 trades in a row, it's not like, oh, I know how the market moves. I know where it's gonna stop. I know where it's gonna start. I know where this move will happen. It's not about that. Because when you're losing, that doesn't mean you don't know. It's about probability. Like, is it possible that the market might go up? Yes. Do we have more chance seeing it going up? Yes. But definitely the market's gonna do what it's gonna do. I believe I heard this line on a TRADINGNUT podcast that I was done, I believe, years ago. Yeah. The market's gonna do what it's gonna do. Your job is not to make the market go where you want it to go, but to try and predict what it's gonna do, where it's gonna go. And you cannot be 100% right about it. And even sometimes you cannot be even 70% right about it. Because I doubt a lot someone that has 3 years trading, 2 years, 4 years trading, and they tell me that they have 70% win rate. Did you trade during a big event like the crash in 2008, I believe? Did you trade during those times? Did you trade for example, during COVID? Because one thing is, some people always in those times, some people are making money, but most people are losing money during those periods. Some people are definitely making money, but most people are losing money.
Expect nothing less, you check as I'm chess, what's happening next? He got the venom, a tangible weapon, no coming in second. This life is a lesson, he got a new engine from pain, it's a blessing. New focus, no guessing, just brought an obsession, all in his possession. You got their attention, now leave an impression and take a redemption.
So we're definitely seeing movement lower. So on the 15-minute, we have this down close candle here. That was where the consistent encroachment was not violated. Yes, it was not violated here. And if we look on the 1 hour, I believe as well. Yes, on the 1 hour, the hour is not at its end yet. It's 8:46, so we still have 14 minutes left to see the hour. But so far, it looks like the body of this down close candle so far there's still 14 minutes left, so far it seems that it might holds. If it holds, we could. If it holds, we could consider that as the end of our retracements.
Work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me, and what was left over I put towards my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand. And damn, I feel like no one takes accountability. They want the credibility, convincingly unwilling to put in the hours it takes to get some power. Don't be fucking sour, take a cold shower, scream until you're louder, work until you're prouder, and all the doubters, they're just your downers. I swear to God they all let me down.
So currently, I believe that yes, price has retraced into the New York AM session. As you see this low here, it reaches into the 1050, 1016 area. So that was New York AM session. Let's see if we had some interesting level in there. Yes, besides this down close candle, we had this down close candle here again. We had 1, 2, 3 down close candle here, and before that, those down close candle that were supporting those. So as we can see, the movements up, higher low, higher high, higher low, higher high. So we are seeing a retracement here. So let's see, that looks like a perfect OTE entry. Let's see if it was. Yep, that was, that was a perfect OTE entry here. If you follow ICT, you will know what OTE is, optimal trade entry. It's a retracement after a price leg up in a buy condition. It's a retracement to the 0.62 level of the Fibonacci retracement. So definitely that was a beautiful OTE there. Besides being, inside of the ranges of those down close candles, it was also an OTE. So that's double confirmation. If we keep pushing higher here, we can definitely still expect to see the high of yesterday being violated. We are seeing some big push up right now. As well, if we are considering the 5-minute time frame, that might just be, if price is not going up, that might just be a retracement to go into this fair value gap and continue pushing down. But I have more faith in the daily bias, so I believe price is not gonna reverse. That's just my belief. Nothing to do with what price wanna do.
There's no mercy in this world, just hunger thirsty persons in different versions. Each new update that shit worsens. Why? Pull back the curtain and
So if it violated this fair value gap, it will then be considered as an inversion fair value gap that can be used as support for price to continue pushing higher. Tini Orango Kawit. I'm not sure if I'm pronouncing this right. I'm not sure which language it is, neither. Definitely seeing some push up here. And boom, as I said, it should be taking these highs out because they are too clean. So if we were to frame, we're not taking any trade. If we were to frame a trade here, our stop would be here. More likely here. And our take profit would be here. Yep. Our target up here. As you can see, as I said, usually when I'm taking a trade, my setup usually gives me a 1-to-3 risk reward ratio. So right now, if price decides to retrace, because it might just go up without retracing. Tini Ora Ngo Kawit. Let's see here what although I don't like it when price does this, but you see this candle here at 2054, 854 Eastern time. This was inside the fair value gap that was down there. Price, when it's going up without retracing, it does that. You will see two candle that has the same low or the same high based on the market directions. So here you see that low comes in at 143.290 and that low comes in at 143.290. That's one of the reasons ICT usually says that you enter usually at the top of the fair value gap. So because even 1 or 2 ticks above, because sometimes spread might leave you out and you fail to participate in the move. But this was a return into the fair value gap. This candle, it might retrace a little bit deeper into the fair value gap, but this was, if you were looking for an entry, this would have been an entry if you were looking for an entry based on this fair value gap here. Is that Swahili? Tini ora ngokawit. Not sure if that's Swahili. Not. I don't understand. As you can see, price is not yet showing any willingness to go retrace down there. As I said, it might not retrace because you might ask why, but because as I showed earlier, this week here was a perfect OTE, optimal trade entry. If you are considering the range of the New York session, like I'm gonna go back to it on the 15-minute time frame, and here that was 7:15. This can be considered as the low of the New York session, and here at 2:30 that was the high of the New York session and also the high of the day. If you take your fib from this low to this, some people don't use the wicks, but I do. That's just a personal choice. So as you can see here, it just dipped down below on the 62 level and pushed back up. So on this, and I usually like to take trade in discount, like within a range. I like to be buying in a discount and selling in a premium. Like for example here, our inversion for value gap that was on the 5 minutes is below the 50%. So I'm confident taking a trade here, while I wouldn't be that confident taking a trade here, like in those fair value gap, because sometimes what price does is it goes there, it do a little move up and goes down, and then do the real move up. And usually my stop loss are very tight, which allows me to get a high risk to reward ratio. Because right now, if you're taking the trade and your stop loss is below this low, you would only have a 1 to 7 risk to reward ratio, and you would have to get a higher target for an increased reward. That could be this up close candle here, as I mean there's a fair value gap here, but we are already into the fair value gap, so that's no longer a target. So this would be our target higher. So for not even that, even higher, for 1 to 3 risk reward ratio, you would have needed a target around here. That means if more than half of the candle, definitely those highs here for 1 to 3, and that's a lot of movement. As you can see, yesterday I believe it was around 140. Let me verify it before I say what I'm going to say. Yesterday's range was around not even 140, 109, 109. So to have a target like that, today's range should be
my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand. And damn, I feel like no one takes accountability. They want the credibility.
50, around 57, 60. Yes, that's feasible, but I don't like to take trades that long. I don't have the patience for that, unfortunately. Because as a trader, you have to know yourself and know what you can do and what you can't do. I'm definitely willing to see what price is doing on this. Definitely willing to see it take my target. So initially my stop was there. And my target up here.
When everybody wants to be king, yeah, they all wanna ring, yeah, we all wanna be free. So show me what you got, what you bring, how you fight in the ring, how you take a fucking swing. Do you got heart, are you mean, got some scars, got some needs, are you willing to go bleed? I swear to God, they all let me down. I always fought just to wear the crown. I'm off at these fucking clowns.
Yes, definitely. Feelings and facts is saying I find that with lower risk reward ratio trades, my win rate is a lot higher because it allows me to place my stop loss on swing highs and lows that are less likely to be broken. Definitely, I 100% agree with that. As I said, if I wanted initially, like when I have one of my strategies, because I have many. One of my strategies to trade the daily candle goes like that. Let me just go ahead and show you that. I mean, when I say my strategy, Ahmed is asking for Euro USD. I don't personally trade Euro USD. I sometimes look at it, sometimes, but rarely. But I don't personally trade it. I mostly trade USD JPY, gold, US 30, and JBP JPY as well. I mean, it's been a long time since I haven't traded JPY, but I definitely trade gold. Gold, USD JPY. Yes. And also I like to trade futures like Nasdaq futures, ES, the mini S&P futures, and YM, which is like almost the same thing as the US 30. Like for my daily strategy, for example, let's start at this swing point here. So with this candle being bullish, after a bullish daily candle, I usually have my target at the top of that candle, at the eye of that candle, and I usually expect the new day to take out the high. Future is my favorite low. Yes, definitely. I love futures. The price delivery in futures is totally different from forex or anything else. It's like sometimes I have a stop loss and the price just like it's playing around the stop loss. It's playing around, but it's weird how it doesn't take me out. While if I was in forex, I would have been out already. And sometimes in forex, you can see that the bid and ask line, the bid might be really like 5 pip away from your 5 pip away from your stop loss, and just like that you see the ask price move and take you out, and just price just reverse after taking you out. It's weird, but in futures it's definitely more clean. The price action is more clean, and there's really not so much manipulation. So I love that about futures. So yes, on the daily time frame, we see this candle. It's a bullish candle that was July 14th. So I marked the high of the candle and expect price to take out the high. So I usually measure the candle from its low to its high to have a big pretty much big idea on the range of the candle. And if I'm taking a trade, it will be between 25 to 50% of the candle. That's one of my strategy that I use to trade the daily time frame. When I'm trading the daily time frame, usually on US 30, it works great on gold as well, but I haven't tried it on USG JPY yet. So after measuring my range right here, I have the 25 and the 50%. I go down to the 1 hour. That was the 14th of July. Okay. So that was that day, the 14th of July. And right there and then you can see that was between the 25% and the 50%. You have this fair value gap here, and on the below that, between 50% and 62%, you have that second fair value gap. So once I'm in that time frame here on the 1 hour, on that's a Monday, 14th is a Friday, 17th for Monday. So once I'm seeing those two PDO raise, the fair value gap here between the 25 and the 50, and the fair value gap here between the 62 and the 50, I know that price will be, if price is willing to go higher, if price is really willing to go higher, it's hard to see it break below the 75%. So when I'm trading like that, I usually take, for example, buy position. I trade between the 25 and the 50%. So as it's there, my trade would start here. My stop would be at the 75% level, and I would target at least a 1-to-1. So at least a 1-to-1, and boom. So that's trading the daily. But if I am taking it in as a swing trade, if I am doing a swing trade, that means I'm not gonna just stay in the trade for one day. I would definitely put my stop below the low of the candle, and would definitely go for logical levels. For example, first we can see this high here that leads to a fair value gap in there, so that would be my first target. But I mean, I would probably go into this level here for 1 to 2 at its close. So that would be my first target. So I would have stayed in this trade for like 1, 2, 3, 4, 5 days. So definitely like 1 week for the week. So I would have entered on Monday and be done on Friday. That's a swing trade. So as you're doing that, you definitely have a lot of room for price to navigate before going to your target. But I definitely do that when I'm trading higher time frames like swing trades. But for lower time frame trades happen more often. So that's one of the reason a lot of traders use them. But in terms of accuracy, higher time frame is definitely the best. So as we are seeing here, price has shown willingness to go higher because it has taken out this buy side liquidity. This buy side liquidity above those equal highs, which is at the same time a market structure break. I am from 880. It's across Dominican Republic where I'm currently residing. So I am from the Caribbean. I don't know if there's anybody here speak French. I also speak French, Asian Creole, English, and a little bit of Spanish. Definitely understand Spanish, but a little bit of Spanish. And what about you? Where are you from? Feeling and facts. Definitely feelings and facts. And in the markets, that's definitely true. Your feeling and a fact. Even your analysis, it's not a fact. Aye, that's great. Feeling and facts. You speak French too. And where are you from? Roberto Trevino. ¿Cómo estás? ¿Cómo estás? Ah, okay. Live in London but grew up in France. That's great. Vamos a ver hoy si el precio va a hacer lo que quiero. So right now we're seeing that César de Honduras. Hola César. Bien y usted. Muy bien, muy bien. Instead of searching inside for what they gave him, a strong will, strong mind causes mayhem. But it would have been better if it wasn't so hot in the Caribbean right now. It's like very, very hot. Ambitions in the right mind can take you so far. It's like you lived a few lifetimes. Take off from a break. Yeah, definitely. That's one thing. Like getting free time to learn a new skill. Definitely that will increase your knowledge, your personality, and your income. Definitely. So for those of you who want to know, I'm not really I don't have a lot of time trading. I am only in since like 2021, so 2 years in. Not a lot of time. If my setup do play out, I'm just gonna 8 USD JPY for tonight, just for tonight, not for the rest of my life, but just for tonight. Cesar is saying that he's trying to trade at this time because he doesn't have a lot of free time due to his work. Yeah, definitely Asian session is an option, but I mean, if you do want to trade like during less time, best strategy would be to trade daily, weekly. So those are really the best for people that doesn't have a lot of time. Daily time frame, as I was showing earlier, this daily time frame strategy is really simple, really simple. So let me go back to it. See, price is doing its thing here, not willing to go higher and not willing to get back to this gap yet. So if we go back to the daily time frame here, we were at this swing high, I'm sorry, swing low here. So we see how the trade would have played out. To go down to the 1 hour, that was 14. So we do see how the trade here, we would have a 1-to-1. Like if you were risking 1% on that trade, you would have made 1%, definitely. But what I usually so this day was bullish, and then we had this trade that was a win, and the strategy has more to it. Let me just go ahead and show you. So if we go on the daily again, filling in facts, saying I'm doing a 100K challenge with Blue Gordian right now. So glad that they have unlimited deadlines now. Definitely game changer. Yes, definitely. As I said, you don't have to rush it. And even with this limit, um, no time limit challenge, it's even better for swing traders. Like before, you had other prop firms offering swing account with lower leverage, but right now you still have 1 to 100 leverage, while you have the opportunity to take swing trades. Like for example, the trade that I just showed you earlier, where I was risking 1% and I had 3% reward. That took 5 days. So if I took a trade like that on a fun day challenge, that would put me up 3%, and that would take 5 days. So if I had like another setup, I mean, the next week I wouldn't have a setup, and I have another setup the week after that. So that would be the third week. So that would be in 15 days. I would have 6%, and maybe I wouldn't have a setup the next week. So the week after that. So that would be in 45 days, month and a half around. If I had 3 winning trades in a row, month and a half around, I would have passed the challenge with 8%. That's if you have 3 winning trades back to back. But for me, that's unlikely. And do you think if I learn properly, can I pass the prop firm challenge? Definitely, you can. I mean, prop firm challenge is not difficult to pass. It's really not that difficult to pass. The thing about it, it's psychological, because you have a target to reach. Like if you were given today, like let's say if you learn the skill properly, and you were given today a $100,000 account, you could make 1-2% on it every month, consistently. That would be okay. That would be like 2,000. And the goal with that wouldn't be to make 7, 8, 10%. The goal would be to get another 100,000 to add on the first 100,000. That would be 200,000. And then now, when you make 1 or 2% instead of 2K, you would have 4K. And then let's say you grow that to 1 million. So when you make 2%, you make 20K. That definitely is the goal. Because to make 8% in a month, like even like for the big investors, they roughly do like, I mean, if they are conservative, like they do around 5 to 6% in a year. I'm talking about people that are managing billions and billions of dollars. So definitely they don't risk that much, because when you have $1 billion, 1% is considerably a large amount of money. And if you can get that, that's life-changing money. So it's because the goal is 8% or 10% for some prop firms. So it kind of put some kind of pressure on you that is preventing you from achieving consistency. It's preventing you from achieving consistency. The rules in itself for not losing more than 5% a day, not losing more than 10% on the account overall is okay, but to achieve like 10%, before it was even worse. You had 30 days to do it, but right now it's better, as you don't have any time limit on that. It's really better, but that's mostly what prevents you from succeeding in those challenges. Because if you knew that you didn't have time on that, and also the thing is, most people, not you specifically when I say you, but most people are rushing to get to the money. Because if you're working, you want to see the money. Like if you just go ahead and get an interview, you get a job, you're waiting for 15 days. For some people it's a month, but most job pays each 15 days. You're waiting for 15 days for your first paycheck. That's kind of it's like it gives you confidence that you're not working in vain, you're not working for nothing. After 15 days you get your paycheck. But with those challenge, you might spend like a whole 30 days for the first phase, a whole 30 days for the second phase, and for some prop firms you have to wait 14 days or even a month before getting paid. That's like 3 months, and you've been working at it for 3 months before getting any money out of it. And that, psychologically, that's hard. It's like asking someone to go into a job, like pass an interview. You had like maybe 100 applicants and you were the one that they selected, but you have to work 3 months up front before getting a paycheck. I don't know anybody that would accept to do that. That's definitely hard. So yep. And yes, scale it up. Roberto Trevino said, yes, definitely scaling, increasing your capital is definitely the goal. As my goal for this year is 1 million, although it's closing up on me, but I still believe that I can manage to do it. I am currently funded with 50K. I mean, I've been funded with 50K for almost like almost 4 months, I believe. I've had 3 payouts, I believe. Yes, three. 2 or 3 payouts, I don't remember clearly. But I've been in a drawdown lately. That's been hard because I was doing 2 things at the same time. I had this funded account and I also purchased a second challenge. So I was trying to pass the challenge while I was trading the funded account. Obviously not at the same risk rate, because otherwise I would have also lost the funded account, because I lost the challenge. Unfortunately, it was a 250K challenge. I unfortunately lost the challenge. But I was taking the same trade on both the challenge and the funded account, and my funded account got into a drawdown. I was down, I believe it was 5.60 or even 6% drawdown. I'm currently up a little bit. I believe I'm up 4.71% on this account. I usually don't take the same trade. I mean, right now I have learned my lesson. I don't take the same trade on this account and this challenge that I'm doing. I don't take the same trade. And I also have another 250K challenge as well that's going up, that's going on. I also lose, I believe I almost lose 1% on it. I almost lose 1% on it, but right now I am back at 0.20 something drawdown, I believe. Let me double check here, because I believe I am back on it with the drawdown. Yes, so I was down from 250 to 247,800. So right now I am at 249 to 300. So I have 0.28% left to get back to my initial balance. And it's been 4 days I started it. So hopefully we can get back up on both the Blue Guardian challenge and the other ones. So filling in facts is, I'm assuming, what do you think about having multiple accounts and copy trading them? Definitely, it can make your life easier, but easier doesn't mean better. Because what? I mean, like I said, I was copying the trades on my challenge on the funded account, and look what happened. If only I had paused the funded account for a while I was taking the challenge, maybe I wouldn't have been in that big of a drawdown. And right now, working myself hard to get back to the initial balance, it's hard. I can tell you, it's very, very hard, because as I said, I was like 6% down, and right now I'm 4.7 down, and getting those like 1 point something percent up was really hard, because you have to downsize your risk as if you were trading a $10,000 or even a $5,000 account while you're trading a $50,000 account. It's like the step that you're taking are so little, it almost seems like you're not doing anything. And you have to do it that way if you are willing to grow back. Because if you said, you know what, I'm just gonna risk 1%, and you lose that 1%. Oh, I'm just gonna risk 1% again, and you lose that 1%. I'm just gonna risk 1% again. At the end of the day, you lose the account. But let's say you risk 0.25%, and you lose. You risk 0.20%, and you lose. You risk 0.15%, and you lose. You risk 0.1%. That was 0.25, 0.15, and 0.20. That's 25, 20, 45, 15. That's 50, 60. So that's 0.6%. And let's say next year you risk 0.1%. You win with a 1-to-3 risk reward ratio. You just make half of what you lose. By lowering your risk, you're getting back at it. But if you were to increase your risk and you lose, the hole would be a whole lot deeper. What ICT strategy are you using? Thanks. So right now I do use what I can say is, most people consider ICT is concept as a strategy, but for myself, I don't. to me, ICT is not a strategy. It's definitely ICT. Come see, it's like ICT doesn't have a strategy. ICT is a framework. I don't know which trader said that earlier. I was watching a video on YouTube. ICT is a framework. As you can see right now, I don't know if you're seeing the USD JPY chart right now. We just dipped a little bit inside of the inversion fair value gap right here, and we're pushing back up. Hopefully we can see our target reach before leaving. But as I was saying before, I stay confident in the bias for the day. And after seeing that retracement down into the 62% level, I'm even more confident. After seeing that push up that take out this liquidity level and this high, I'm even more confident again. So that's it. So unfortunately, we had already took our 2 trades for today, so no trades for us again. That's our rules. No matter what, it doesn't matter if it's gonna be a win or if it's gonna be a loss, but that's the rule. And the reason why today I took it, I usually take my trade after 8, but the reason why today I took my trade at before 8, it's because in the past days you would see that price has just not been respecting the Asian open. It just took off before 20, and I hate that when I see price going up and not letting me get in. So as you can see here, that was 1945. Price entered this fair value gap, and boom, doesn't retrace. That was on Monday, and on Friday I believe it did the same thing.
I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign.
That was not Friday, but Sunday.
I feel like I'm losing my mind.
Let's see here. Where is Sunday? Yes, Sunday it did the same thing, because I lost a trade on Sunday on this one. As you can see here on Sunday at 1944, it dipped here at 1912 and 1944. It reached into this higher fair value gap here, and it dropped exactly around 8.82. I like to take my trade after 8:15, like around 8:15. After that, I like to wait for the first 15-minute candle to close. But as I've been seeing those lately, price take off at 20 exactly and just keep dropping, and it goes a little bit below Friday's lows and reverse. So at that point, I thought, wow, maybe price is going back up into this entry to give us another entry. And I took a trade, I believe, around here, and then it went down there. But unfortunately, I was so confident that price would go back a little bit down, not totally to the low, but a little bit down, at least in those fair value gap here. I didn't close my trade, and then it just retraced back and took me out. So because of that, I just changed, and I said today I'm gonna see if I can catch the move at 7:45 before 8. And unfortunately, that's one thing in trading. Sometimes you must be flexible. You must be flexible to know when to adjust your trading plan, when to adjust your strategy. I mean, and no strategy is static, because the market doesn't behave the same way it does every time, all the time. So to answer the question for Ron Feliciano, What ICT strategy I use, I don't use a specific ICT strategy. As I said, ICT doesn't have a strategy. ICT has a framework, and I believe that ICT's framework or ICT's concepts in general, those are how the market moves. That means it doesn't matter if you're using SMC, it doesn't matter if you're using SNR, support and resistance, it doesn't matter if you're using moving averages, it doesn't matter if you're using, I don't know, MACD or RSI. If you're using those for me are strategies. If you're using those and you add ICT to it, you're definitely gonna win and you're definitely gonna be profitable, because ICT concept or ICT in general, those are not strategies to me. So filling in facts, 143.66 should be your entry. Mm, 143.66. Don't see one entry for sell or 143.66. Like for ICD, it has a lot of concept that you have to know to read price action. You have the breaker, you have the fair value gap, you have the order block, you have and by the way, the order block is the one that I least favorite because I'm a little bit confused about it sometimes. So 143, 166 for buy. So 143, 166. No, that was that's my stop loss. But I believe I heard that too. There's a principle, I mean someone that said, I don't remember who, but a trader that said, look, where you want to put your stop loss, just go ahead and put your entry there and put your stop loss even lower, because they're gonna go for your stop loss. But based on, let me see here. Based on the fact that price has already taken liquidity down there before the session, and we have seen this week here is a perfect OTE with 0.62 retracement, and the fact that we had this push up here, and when we measure our range here from this low to this high, we have this is around 0.62 level. But based on the fact that price should have moved up a lot earlier in the session, to me, I mean, maybe there's been a low volume so far, but to me, price should have moved up a lot earlier. So it took a lot of time for price to go down there, take out those liquidities and go into the New York ranges to take out liquidity before going up. All those together make me confident that price wouldn't want to go down there. I mean, it might want to go down there in a future time, but definitely not right now. To me, that's my personal opinion. That's why I didn't put my stop loss at the 100% level. I just put it below the 0.75 level. And also I consider, you see, price like to do that. I don't know if it's a concept or not, but price like to do, it's like some people call that W. Like for example, you see this move down, this move up, this move down, this move up. So I believe that if price wants to go down, it shouldn't go below this low here. That is here. Let me remove that line so you can see it clearly. The low that is here, I believe that if price wants to go a little bit down, it shouldn't go below that low. That's my belief, because I've been watching price and I've seen it does this. Sometimes it does go down, definitely sometimes, but most of the time, as I'm saying, trading is not about 100%, but most of the time it's not going to go below this low. And also we are taking into consideration, as I was saying at the beginning, we are taking into consideration the fact that yesterday was, to me, a large range day, and we had a very aggressive move up. So if price wants to go higher, as it was showing it yesterday, it's usually not willing to stay a lot of time down. I mean, the movement, the pressure is to go up, 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 and up. So right now, I would say we would have reached one of our first target. As right now, we would have it's 1 to 2 risk to reward ratio. For some people, if when you're starting out, for some people, it's good to take partial profits at this level, 1 to 2. You could take 50% of the trade off. But for me, as I said, my strategy usually gives me 1 to 3 risk reward ratio. So I am usually okay with waiting for that 1 to 3 to happen right here. So the inside bar going get ran to wick back up. Okay. Did you use a breaker or a block? For most of my entries, I use fair value gap or inversion fair value gap. I most of the time don't use breaker or order block for entries, but I look at them as levels where price should react. For example, on gold, let me show you that on gold. I believe it was, let me go to the weekly time frame on gold. I have done my analysis on gold this morning. If you watch the previous video, the New York session live, you can see all the details. So right here on gold, you can see, let me remove this for a moment so that you can see a clear price action chart. You see this move up and this move down. After this move up and this move down, we have a second move up, and this time it takes out this high here and then a move down lower than the two previous move up. So in that price leg moving up, we have that candle, which is the last down close candle before this move up that takes the high out happened. This is what ICT call a breaker. So when I put this back, you will see this line, this red line here is the high of the breaker, and this red line here is the low of the breaker. So for me, inside of the breaker, we also have a fair value gap. I would most likely take a trade based on the fair value gap instead of the breaker. But I know that the fact that the fair value gap is inside of the breaker, there's a higher chance of price rejecting at it, reacting to it, and going down. So the breaker just adds up a little more confidence in me taking a sell trade at that level inside of this fair value gap. So I do use breakers and order blocks, but not as entry confirmation. They are more of a confluence that gives me more confidence into taking a trade. So right now we're seeing a big rejection on that candle after taking out these highs here. Okay. You got equal low at your entry low. Yeah, probably. I mean, sometimes you can have equal lows and equal highs. I mean, equal lows and equal highs will be taken out for sure. But you have to be aware of the bigger picture behind prices to know when your equal lows or equal highs will be taken out. For example, I mentioned it earlier. You see this? Let me go back on the 1 minute. When price dipped down there, I said, okay, it's gonna take liquidity here and reverse and go up, but it just went up enough to create equal highs here. So when I see it dipping even lower, and when I go on a higher time frame and see it reaching into the 62% level retracement inside the New York range, I said, okay, great. That's a confirmation that right now price should be reversing totally. That means continuing up totally. If in fact the daily bias that I have wants to hold. So I know for sure that these equal highs are gonna be taken out. So right now after this push down into the 62 level, 62% retracement of the New York range, I'm not worrying about any equal lows. I'm more likely looking for equal highs to be taken. I only make sure that my stop loss is at a reasonable level inside the range that we are in. First off, I identify the level. I see there's a lot of when in a price leg there's a lot of fair value gap. What I do to clear out my doubt about where price might want to go, might want to stop before reversing, is I look on the previous price leg to see if there are any important inversion fair value gap. Inversion fair value gap is a fair value gap that was violated, that was traded through and through. For example, here on the 5 minutes, we have this leg down here, and we have a fair value gap inside of it here. And when price went up here, it traded through it. That means it didn't respect it. So as soon as it didn't respect it, I know it's no longer a fair value gap, but an inversion fair value gap. So instead of being a resistance for price to push it down, it's gonna be used as a support to push it up. So that's it right there. So those are all confirmation for me to tell me that price might not want to go lower. Also here, you have an inversion fair value gap here. I could have considered it, but as I said, consideration fair value gap, how you use them is based of the bigger picture. Like, I already know price wants to go higher, so why would price want to retrace 75% down if it wants to go higher? I mean, if price is going higher, it's not gonna go back 75% of what it already did to let you in. Definitely not. It might go to 50%, and you can see that go in a chart where it's going up fast, usually retracement are at the 50% level. If it's going up fast, you're not gonna get OTE, you're not gonna get 0.79, 0.72 retracement. You're gonna get 0.50 level, and that's it. And even on the daily time frame, when price is going up higher fast, you're not even gonna get 50%. You might get 25% retracement because price wants to go higher. Price is reaching for a higher time frame level, and that's it. Price doesn't want to stay down there. So that's mostly why, I mean, that's just to explain why I myself take those level as my stop loss entry and stuff. So that's why. I mean, someone might take the same trade but differently, a larger stop loss, a larger take profit and stuff. That's okay. But that's my explanation, my logic behind taking this trade. And be aware that what I'm saying is my explanation. It doesn't have to be right. And right now, I mean, if anybody was in that trade, whether I am right or wrong, if this person wanted to make money, he would have made money, because that's right. That right there is a 1-to-2 risk to reward ratio. With a 50% win rate, you can make a lot of money with that. That right there is a 1-to-2 risk to reward ratio. See here, that right there, 1-to-2 risk reward ratio. But I am waiting for it to give my 1-to-3, and after that I believe I should begin. I mean, it might not. There's no certainty into that, but that's the expectation, and that's what trading is. Okay, the small breaker at the close, I use it for support and resistance. Great. So we have Caesar that was asking for, I believe, okay, filling in facts was saying I am floating at minus 0.11% loss, trying to get back into profit too, only risking 0.25% and 0.50%. That's great. That's my plan. Definitely, that's my plan. I mean, before we go, I might if we have time, I might go on and show you my trading plan for this challenge. I definitely recommend to write it down. So Roberto was asking, if you don't mind, can you show me a good strategy or direct me to a good video for a strategy that I can use after work? Well, that's a difficult question, because there's no such thing as a good or bad strategy. There is a strategy that you can trade, and a strategy that you can't trade. And even based on the fact that you don't have a lot of time, there are still strategies that you can use, but you might not be able to use a certain strategy or another strategy. For example, as I was showing my 1 daily strategy earlier, that's for people that wants to do swing trades, longer term trades. For example, you see here on the daily first day, that was Friday, July 14th. So I was considering the market bullish, but after taking the high of the day here, the candle came back and closed within the range of the previous candle. So when that happened, I no longer consider my bias to be bullish. So I switch, and my new bias become bearish. So I am considering this level to be bridge the new day. So what I do is I come and measure my trading day range from high to low, and I go to the 1 hour time frame. That was the 15th. No, that was the 17th. Okay, so you can see that was the 17th, and I'm gonna be trading, I believe, the 18th. Yes. So on the 1 hour time frame, I'm looking for what? I'm looking for a retracement into here. One thing is, as we were already closing, we close inside the 50 and 25 level. I would be looking for my trade to happen. I mean, as I'm looking for down trades, like short trades, I would be looking to take my trade between the 50 and the 75%. So between the 50 and the 75%. So here you can see we don't have a fair value gap here between the 50 and the 75%. But what we do have is definitely an up close candle in between multiple down close candle. That's usually the sign of you might consider that as an order block or something. But as well, if you go down there, you definitely have, I would say, an order block. And as ICT said, look at the order block and look at what time it was formed. If the time is relatively important in terms of kill zones and stuff, it's more likely to hold. So as you can see with this order block, it was formed at 9 a.m. So that was around quiz open. It's 9:30, so 9 a.m. So that's within the windows of New York session. So that's definitely a big confluence that let me know that this order block might hold prices. And also, this is only in addition to the fact that I already was having a short bias. So I know price is more likely to go down. I have an order block on the 1 hour time frame, which is a prominent time frame for those kind of trades. And I have an order block that was formed at 9 a.m. I don't need anything more than that to take my trade. So as I was taking this trade in between the 0.5 and 0.62 level, my stop loss would then be at the 0.75 level. Because as I said, if I'm expecting price to go in a direction, it's less likely to retrace more than 75%. It can happen. It happens sometimes on the days where price wants to grab liquidity before moving in the directions. It definitely happens. But if it's not one of these days, I want to maximize on my risk to reward ratio, because at the end of the day, you might have a winning trade. Like for example, you might win one trade, you do 1-to-1, and you lose 2 trades after that. But me, if I won 1 trade, I have 3 trades to lose before I came back to break even. So right now you see with that trade, so getting previous day low and putting my stop at the 75 level, that's 1 to 4.6 risk to reward ratio. So that's a strategy that I use for trading the daily time frame. The trades, it takes less time to frame the trade, less analysis, because you're only going into 2 time frames, daily and 1 hour. Nothing more, nothing less. Daily and 1 hour. You are on the daily to know the overall bias of the day, and then you frame your trade on the 1 hour. Point blank. That's it. You're done. Nothing less, nothing more. Did something wrong here. Okay, so as we're seeing here, price is consolidating around this level. Okay, Jay Angel is asking, currently trading US 30, what's your opinion? Frankly, I don't have an opinion on US 30 right now. As I was showing earlier, US 30 is playing a game since Friday. I don't know if you were following NFP trading. On Friday, price did both movements in the same day at the same rate. On Friday, we had a drop in the morning, and we had a push up after NFP, and before the close we have another drop to close below that day. That means we have at the same time take out the high of the previous day and the low of the previous day. When those happen, I usually step out of the market. I stay out of the market because you definitely don't know what price wants to do, because that might be a sign that there is a higher chance of price going lower, because it take out this low here, and we have a BC here, buy side imbalance, sell side inefficiency. So price might want to go lower, but at the same time, we know that US 30 has been rallying up for a long time now, and as I mentioned earlier, when price is rallying up like that, it doesn't like to do much of a retracement. Like when price is rallying up that much, if it wants to continue higher, it's not gonna retrace that low. So it's probably more likely for price to reach into between the 25 and 50% level and go higher. And when I say between the 25 to 15% level, if I'm taking a trade in between those levels, it's usually more probable that you're gonna be filled at this level, because sometimes price just reach into the 25 and doesn't go deeper into this range here between the 25 and the 50 and just go back up. So right now, the 25% level might just be the retracement that we're gonna see on US 30 before it continues up. So we definitely have some targets here higher that was on February to be achieved. We also have some targets here on January, and I would say the most awaited target from December of 2021. Oh, it's not even 20. Yes, it was 20. It's not even this year. Those targets are from 1 year back. So that means 2022. So this is even 2021. I know 2022, January 2022. So we have those targets as our main higher time frame, higher PDOAs that we should be targeting. But as I said, right now, US 30, I would just be sitting in my hands. But if I were to force it, I would say that price might want to go up, because based on the fact that it's been rallying up and we see that little retracement into the 25%, and that we have here fill out this gap in here. So we have delivered to the downside here, and we have moved up pretty fast. And at the same time, this candle today took liquidity below yesterday and Friday's lows. So with that as a big picture, I believe that it's more likely that we're gonna see higher movement on US 30. So if I were to analyze this, today, I would measure up my, let's say we were framing a trade here on the 1 hour, I would measure up my daily candle range. So that gives me an idea of where my levels are. Okay, so currently price is residing at between the 50 and the 25%. If we go down to the 1 hour time frame, that's what I don't like to see in price. When we have too much fair value gap, I like to see one or two. But right there, you have one, two, and three fair value gap inside of a one leg price. So usually when that happens, I look for inversion fair value gap on the previous leg, and I look for them to be below 50%. So this fair value gap here is below this inversion fair value gap here. It's below 50%. It's around the 62% level. So if price wants to retrace before continuing higher, it might just tap into this fair value gap, not even enter it fully, but tap into this fair value gap. Because if it wants to go higher, I don't want to see it fully fill this gap. If it fully fills this gap, I would be worried, because usually if I'm taking this trade, my stop loss would be at this 0.75 level, because we're expecting higher prices. If we're expecting higher prices, we don't want to see price go lower than the 75%, mostly on those higher time frames, like a range that was defined on the daily. So we don't want to see price go that low. And also due to the fact that price already has taken liquidity below yesterday and Friday's low. So those are just confluences to me that price wants to go higher, and it shouldn't go below the 75% level if it wants to continue going higher. So in terms of lower movement, we could expect, let me see here the economic calendar, what we have for tomorrow. So tomorrow, the 9th, we don't have much news on USD that could really affect the market, I would say. Beside that 10-year bond auction, that not really that much of a thing on the US 30, I wouldn't say. Let's see. As you see here, no consistent effects. There are both risk and growth implications. So I wouldn't consider that as a high impact news on US 30 mostly. So besides that, all the news that we have will be on August. CPI, definitely big news. CPI, unemployment claims. So with that, I don't know, price might not want to do any move. When I say any move, price, because as you see, NFP did a big move and it just consolidated after NFP. And with CPI coming on Thursday, price might just want to wait for CPI data to get a direction before doing its move. So definitely be careful. Be careful with US 30. Mostly it moves a lot, as you have seen on the daily time frame, those big candles, it moves a lot. I would recommend being careful with US 30. So my take on it would be this inversion fair value gap here that overlap this fair value gap here below the 50%, below the 50 and the 62% level. But we might not see that deep of a retracement, or price might want to go down. Definitely, as you know, the CPI is on Thursday. So let's take a look, I believe, last look on USD JPY. USD JPY is definitely not moving as I expected it. I mean, it moved. Definitely, it moved, as it already gave us a 1-to-2 risk reward ratio. But I mean, ICT also said that after a big move day, expect the next day to be choppy, because I mean, that's why I take the trade even earlier than 8. It's because I didn't expect price to go down there to take out. I expected price to just get into this fair value gap and push up. But as I said, yesterday was a big push up day. So we definitely had some liquidity runs and take out liquidity below those lows before pushing up. But I mean, there's always opportunities in the market. A scalper could have taken this trade. As we were seeing, this usually when we have equal lows or equal highs forming, you can expect liquidity run. If we have equal highs and equal lows forming, you can expect liquidity run in the opposite direction. So I'm gonna say that again. If you have on a chart equal lows and equal highs forming, expect to have liquidity runs. I mean, liquidity taken out. You see, after forming these equal highs, that's what ICT calls, I believe, engineering liquidity. After forming these equal highs that create liquidity here, above here, we have a run for this low. So we have a run for this low. I mean, after creating this high here, we have a run for this low. After these equal highs, we have a run for this low. So right now, a scalper would have taken that trade here. As you can see, you have inside this candle a fair value gap here that would have been violated here and would have been considered as an inversion fair value gap again, and you could expect price to go in there. So there's an inversion fair value gap here, there's a fair value gap here. You put your let's say you put your entry here and stop. Usually I put my stop if I'm entering based off of an inversion fair value gap. My stop is below or above the inversion fair value gap, because I found those inversion fair value gap to be more respected, more high risk than the fair value gap itself. Not high risk but high reward, sorry, than the fair value gap themselves. So you see, this would have given you a 1 to 3 risk reward ratio. That's definitely a good trade. Short trade, good trade. If you were scalping with no bias at all, that would have been a trade. So we are about to put an end to the live, as USD doesn't want to let us see the move. It's probably gonna happen while we're sleeping, as we have to wake up tomorrow morning. We're gonna be doing the New York session again. So it's been a pleasure to be here with you guys. We have some very active participants here today. We have Sina, we have Glenn, we have Filling and Facts, we had Roberto Trevino, we also had Caesar from Honduras, and we have Jefferson, Ron Feliciano, thank you guys. Thank you for tuning in and waiting for you tomorrow morning if it's possible for you. At 7:30, we'll be live again, trading the New York session, most likely focusing on gold because we most likely trade gold for the New York session and most likely trade USD JPY for the Asian session. It's been a pleasure. Have a great night for you. Who's gonna go to bed right now? And a great morning for you who's gonna go to work. Goodbye. Till tomorrow.